Welcome back to KPMG Arise News 2025 budget today. I am hosting Omapaye. We're still live here at the KPMG Towers in Lagos, Nigeria. Now let's get the macroeconomic breakdown of the private sector thinking into the 55 trillion naira budgets just signed last week by Mr. President. Meet my panel, Tilewa Adebajo, who is the CEO of CFG Advisory, and of course, Wole Adebajo, who is a partner at KPMG Nigeria. Gentlemen, good morning. Good to have you.
Good morning.
One is a Democrat, the other a Republican. I'm not too sure which of you. There's one in a red tie. So I'm not too sure who amongst you will be looking at the budget. But both of you are from the private sector, so I love this. We've listened to the CEO, Wole, giving us a very robust opening of this particular event, and he spoke about those seven pillars of the budget, called the seven pillars, those key sectors. And then we've got the minister in charge of budgets also speaking to the government side, the fiscal side of the budget as well. So let's take this to the private sector, Tilewa, and again, we'll look at some key parameters in the budget. So let's start with money is everything. So let's start with exchange rate. It looks like everything boils down to exchange rate, 1,500 as a budget assumption for this budget. What's your take on that figure?
Well, it's neither
ambitious.
It's neither here nor there. I think it's quite realistic because it reflects the market conditions at the moment. So I think what is more important for us, I think, is to understand what the impact of this budget is on the Nigerian economy as a whole. If you take a look at the analysis, I think Tola gave a very fantastic overview. And in terms of drilling down on his own analysis, what I'm looking at that's striking is the fact that if you take a look at the breakdown of recurrent and current expenditure, you're seeing recurrent expenditure by 3.64 million. Most of this money is going towards the households. So basically, it's giving households some sort of consumer spending. The key factor here is the capex of about 23.8 billion, which is about trillion, which is $14 billion. How is government going to spend this to be able to impact the economy? That is what is important. A total budget, so basically revenue is about 40 trillion. But what is important is that government never meets its revenue targets. Probably they hit about 70% of these targets. So the deficit, the debt from this budget, which they're talking about, the deficit of this budget, we're looking at about 14 trillion naira. Tola worked it out to be about 34%, but probably that's going to be increased more to about 45%, because if you discount the fact that government is not going to meet its revenue targets, then it becomes an issue because debt becomes a big issue in the market. But overall, the budget is, if you take a look at the whole size of our budget, it's only about $30 billion. And that's only about 15% of our GDP of $200 billion. So in effect, government's contribution to GDP is only about 15%. So what is important, I think, is that we need to focus this time on the government policies, because we've reached a level of economic stability. So how do we begin to build on this stability for growth? And what is important is that government needs to put out the right policies to ensure growth, because the capex budget for this year cannot build a refinery. Dangote refinery is about 19 billion, capex is 14. So it's important that we need to look at the private sector and see what sort of policies and investments that we can put in place. With all this work that they're doing with the Saudi government and the Saudis trying to build agriculture with food security, those are positive steps, but we need to look at how other local investors can begin to invest. So right now, it's not so much about the government budget. It's about the sort of policies that government will implement, especially with trade, investment, and industrial policy that will encourage growth.
I think that's your opening secret. Let me ask Wole, as far as the exchange rate is concerned, we're stabilizing the naira, but we need to strengthen it. So in terms of the figure, the 1,500, do you think that's a realistic rate to put this budget to life and to make it to deliver? And what more do you think we can do to stabilize and then strengthen the value of the naira? Then we're going to come back to you as to what do we really want. Is 1,500 the new normal? But let me hear from you first.
Okay, thanks. Very strategic question. Now, as you think about exchange rates, you must understand what are the forces that actually drive, the prices, which is your demand and supply. Now, over the past few years, what we've had a scenario is that there's been significant pressure on our exchange rates, which is driven by, number one, default subsidy. In the past, we had our consumption figure to be about 65 to 70 million,
Liters per day.
But in reality, based on the fact that we now have a food deregulation, we've dropped that to about 35 million, liters per day. So that tells you that the pressure we have on FX has actually reduced significantly. Number two, the speculative demand as well has also dropped significantly. So within that context, you can agree that the 1,500 is actually realistic given the stability we've seen in the market. But there are risks that the government must be aware of, which we must proactively track and mitigate.
What are some of those downside risks?
So first of all is the fact that if you look across the globe, there are global dynamism that is actually that will impact the prices of goods and services. And one of them is the tariff. Now, as you impose tariff, what you are going to see is a situation where you're having increase in prices of goods and services, which could actually lead into inflation in advanced economy. When that happens, then dollar becomes strengthened and we can become weaker. So the question is, what are we going to do to ensure that we mitigate that impact? That's it. Number two.
And that is already beginning to happen.
Exactly.
Somewhat.
Yeah. Number two is a conversation around the energy drive in terms of energy independence in the US. It also has implications to actually weaken our capacity to hand FX to actually defend the naira. So what government needs to do are three things from our own perspective. Number one, there must be strategic direction to ensure that we continue to sustain the confidence in this economy, which we've seen over the years. So investors' confidence must be sustained. Number two thing that government needs to do to actually mitigate the impact that could come in is the fact that there must be import substitution strategy. What we've seen in the past where we had significant dependence in terms of PMS imports, that is gone. We must be able to say what are the other commodities today that we consume significantly, like wheat that we're importing. What strategy are we going to put in place to reduce dependency on that, to actually strengthen the naira? That will also be very important. The last one is our ability to attract foreign portfolio has increased, but when it comes to foreign direct investment, it's weakened significantly. So speaking to what Mr. Tilewa has said, government must be strategic in terms of identifying those guys that can come into this economy and come and invest in collaboration with the private sector. That must be done in a strategic manner. Yes, we have a new Minister of Trade, Industry and Investment. There must be targeted approach to attract those guys to come and invest here. And once we do that, that enables us to actually support and defend the naira.
Very interesting. Tilewa, do you think 1,500 is comfortable to the private sector in terms of what is in the budget, if they can work with 1,500 as, well, give or take, the naira value, dollar value for the naira for the rest of the year as far as the budget is concerned? Well, is 1,500 the new normal?
500,000 might not even be the new normal. If the government is able to sustain its policies and be able to instill confidence in the economy, we could get to 1,000. There are many things that the government can do in terms of structural reforms that can get the foreign exchange levels back to 1,000. So what is important now is that we do have a very transparent foreign exchange mechanism in the system. So what is important now is that if you talk to some people abroad, they have an app which they will use to send money to Nigeria, and it will give them the rates at the prevailing rates through that transparent system. And it's something that the local bureau de change operators also need to adopt. And we need to have one single market in Nigeria. Not that you have some other people on the side say, oh, we're doing parallel market. They look at the market rates and they want to add a 50 naira or 100 naira premium to that. So as long as government continues to maintain stability and confidence, I don't think that's a problem. What we're moving towards now, because you have a new foreign exchange code, you have transparency in the FX system, the central bank is no longer the major player in the supply of dollars to the foreign exchange market.
Exactly.
And so what is happening is that the government is actually making money from the foreign exchange market. As the minister said, a lot of the governors have seen their revenues double because now the central bank collects some of its dollars in terms of the federation account, sells it in the markets, and they're getting more naira for the dollar. So what is important for me is price discovery. We now have a transparent foreign exchange system. If you can maintain the confidence within the stability we have now, and the key factor is the fuel price, which is the most significant cost push inflation factor in Nigeria today. We've seen stability in the fuel prices. We need to keep it at that. Everybody now knows that fuel prices can move between 850 to about 1,050, depending on the international price of petrol. We need to keep it at that so that everybody understands that there's that stability and we maintain. So the only thing left in the foreign exchange market right now is price discovery and government stability.
And some liquidity. And more
There
liquidity.
is liquidity.
We can use more liquidity.
There is liquidity in the markets.
We can use more.
You can use
You never say no.
You never say no, but if you want to drive liquidity, then you look at how do you drive FDIs into your markets.
Exactly. That's what we spoke about. That's
exactly.
what spoke about earlier.
That is now a question of, as I mentioned earlier, policy.
Yeah.
If you now put in the right policies in place, then it's a lot easier now to begin to achieve that. But right now, I think we're at a very, very good level of stability. And what the government needs to do is to put the right policies in place to be able to ensure we maintain stability and, more importantly, growth.
So we know where petrol subsidy and all of that is right now in terms of volume that we consume and all of that. So one of the things that is in the budget was inflation target of about 15% or thereabout. And then you look at issues of supply chain disruptions. You've got issues to deal with within the wider economy and global issue. But again, we need to have an environment that will help us achieve some level of productivity, not inflationary input into industries and agriculture, and with exchange rate at 1,005 as a target. Will you tell me, how do you think we can get that done this year?
Okay. So inflation is an extremely important variable, within the macro context. There are three main variables that are extremely important. One is your exchange rate, which we've actually dealt with. The second is your cost of capital, which is your interest. The last one is your inflation rate, which is extremely critical. 15%, as I reflect on it, and looking at, yes, we've done a rebasing that actually says now we're 24, but in reality, is it 24? Maybe if we had actually been proactive, such that we've been doing it maybe in line with international standard of...
That's the rebasing?
Yeah.
Every 5 years?
Every 5 years. Maybe we'll have known the true picture of where we are. But if we are not proactive in addressing certain issues, I don't think 15% is optimistic. There are certain things that needs to be dealt with. So if you decompose your inflation, you will discover that food inflation is actually extremely significant. Though NBS has been smart, what they've done with the rebasing is to actually split food inflation into two components. So there is the core, and now you have the one that relates to restaurants and the rest.
Hotels and the rest.
Yeah, but if you focus even on the one that is the core, it's still significant. So ability to attack that food inflation is extremely important. And to attack that, you must fix the problem around production. Productivity is actually low. That's one of the major problems we have in this economy. So one is we must be able to attack, our productive capacity, especially within that sector. So we must be able to say, as we look at food inflation, what are the structural issues within that space, and proactively address that by looking at, a value chain analysis. That one is important. I think number two is the fact that I was at a meeting just, last week, and it was very atmospheric, to be candid. What we found in having the conversation is that you empower the farmers to some extent, giving them fertilizer, but as they produce, they actually export some of these things to other countries, not even serving the Nigerian market. So what mechanism do we have to actually attack smuggling? What mechanism do we have in place to actually ensure that there is a price control mechanism, in terms of what comes out. So attacking food inflation is extremely important if we're to deliver 15%. The second thing I think is important is our route to market. You produce, but getting into the market is actually a major problem. So logistics still needs to be attacked significantly. If we can address those two variables, I think we'll be able to move towards something like maybe something close to 2018, but 15% would be a lot of work that needs to be done to actually achieve that.
Quite a lot we still need to do as far as the midstream segment of agriculture is concerned. We have to fix warehousing, we have to fix storage and a lot of other things before you talk about agro-allies. So, Tilewa, in terms of inflation, do you think 15%, if we put the entire 55 trillion naira in a box, if we sort of, let's take inflation of 15% of that, how much will be left for all the monies we're talking about into the critical sectors, health, education, even security, healthcare, and social welfare, and what have you? And do you think 15% will be comfortable for industries that will have to deal not just with, well, stability, some reduction in price of petrol, but again, band A, band B, whatever that is, and a lot of other structural issues we have to deal with, supply chain, logistics within the country?
Well, I think I don't want to dwell on inflation because there are changes that are going on, and I think we need to go by what the Monetary Policy Committee and the Central Bank is doing. I think that should be our guide. And what they've done is they've held their rates in anticipation of any issues. Inflation is a lagging indicator, and I think we all have to wait until the next Monetary Policy Committee meeting. And let's see the direction.
The rebased GDP.
Yeah, yes, the rebased GDP is not really maybe an issue because if you rebase inflation, the rebased inflation figures was 24%.
Yes.
So officially, that's what they're saying inflation
So maybe the rebased GDP will give the central bank, when the MPC...
No, the rebased GDP doesn't have any impact on inflation. So that's inflation. They've already told us that the rebased inflation numbers is 24%. But the fact is that there is a lagging indicator, so you need to be able to wait and see the impact before you understand the full value of inflation. I really don't think that's the issue. The issue right now is the fact that I think we need to focus more on government policy. The most significant issue for me right now is the debt profile of the government. We have, by the end of last year, our debt profile would have exceeded 150 trillion naira. If you take a look at that, the cumulative deficit over the last 3 years is right now standing at somewhere around 36 trillion naira. And if you take a look at the top 4 items in the budget, which we have, defense, education, and healthcare, you find out that the debt service for this year, which is about 16.3 trillion, exceeds those 3 top items. So debt service is a significant portion of the budget. And what we're seeing now is that the government is technically insolvent because the current liabilities exceed current assets. And the 3-4 years we've had of consecutive deficit financing as a source for concern. So I think government really needs to optimize equity within its capital structure. And what we're saying is that government needs to sell down assets more than what they're doing. And the recommendation we've made is that they should take a look at the oil and gas sector, which is a sector that is on the rebound because of policies. Government has put in positive policies within the oil and gas sectors, and we're seeing the results. In nominal terms, the oil and gas sector grew by 30% last year. 2 years ago, the growth in the oil sector was minus 19%. So there's been a significant turnaround within the oil and gas sector because of the policies. In 1977, we were producing 2.5 million barrels of oil. Today, we're at about 1.3, 1.4 million barrels of oil. So if we put in the right policies into the oil and gas sector, I think we'll derive immediate benefits. And one of the things we're saying is that you need to sell down some of these JV assets. In the process, you can raise about 35 to $40 billion, and then you can use that to plug the hole in your balance sheet, reduce your expenditure, reduce your debt profile, and then use that to improve your cash flows. More importantly, the 2 million barrels that you're looking at a day, we can return to 2.5 million barrels. And on the other side of the balance sheet, your revenues will come up. into the Federation account, which is most critical dollar supply that we need. And in answering some of your questions that you raised that say that how do we increase productivity because we have an output gap in Nigeria.
Yeah.
So one of the easiest things that we need to do is the fact that there are many industries which we've invested in. And since agriculture is a topical one, we have 3 refineries in the Nigerian ports today owned by Dangote, Bua, and flour mills. The production of those 3 refineries has enough to supply the whole of the West African sub-region. That's a very strong African continental free trade project and a potential foreign exchange earner. But unfortunately, these 3 refineries are still importing raw sugar. So what needs to be done is that these refineries, there needs to be a deliberate plan, just as we had with fertilizer, cement, and now refining. Nigeria's refining capacity now is close to 1 million barrels a day.
So crude oil.
Yeah, 1 million barrels a day. So that's important. So we've restored self-sustainability. So Nigerian farmers now need to be enhanced to grow the sugarcane, the industrial sugarcane that is required for these factories, so that we're no longer importing those raw sugarcane. That productivity alone will significantly close our output gap and keep Nigerian farmers engaged.
I appreciate all of that. Thank you so much. Then we take that back to the oil price, because whatever we do, we still need the oil money. $75 a barrel. This morning, 70. New York crude, about 66, 65. Not so fantastic. So, what is good news? Some big oil firms are coming back to fossil fuel. BP, Shell, the rest of them. Total Energies. There's a bit of a pullback. Donald Trump will be in office for 4 years. No one knows what's going to happen after that. So, do you think the 75 is enough? What happens? Are we looking at, if you have so much oil in supply, OPEC wants to bring 138,000 barrels back to the market by April. So, are you concerned about, even if we're doing, as we're doing now, meeting OPEC quota and slightly above that figure, do you think if price remain very low, now going around the middle top end of the $60 handle, that this budget that we talked about would not be impacted?
Okay, thanks. Very, very strategic question. So a key variable, as we think about the budget is the crude oil price. I mean, $75 per barrel for 2025. The first question we need to ask is, what are the variables that will actually determine the overall price? And it's an interplay of complex variables. So you have the conversation around, increase in production, which we've seen that US is actually pushing significantly. That will increase supply. The other variable that is also very important is demand. What has been driving demand in other parts of the world has been specifically, industrialization as well as transportation. But when you compare what has happened over the last 1 year, especially in China, where there has been significant investment in electric vehicles, and demand from that market is actually dropping, So you are increasing production, you are increasing supply, but demand is actually being challenged because there are other technology and their movement into electric vehicles. Even in Nigeria, we are seeing some guys, trying to demonstrate, resilience in terms of coming into Nigeria to make investment. So those demand and supply forces will actually have significant role to play. Now, the question is, what has been the forecast by some independent guys? So if you take, EIA, their forecast is $70 per barrel for this year. Their view is that even going to 2026, it will drop to like $66 per barrel. IMF has also dropped it to about 74. When you look at Goldman Sachs, they're saying it will be between 70 to around $80 per barrel. So reflecting on this, that $75 per barrel needs to actually be challenged, to be candid, as you reflect on those variables that may likely impact oil price. So as you look at it overall, I think we must be deliberate. Otherwise, the deficit issue that we are speaking to will actually, expand and increase significantly. But overall, I think it will be within the range of about 73 to about, that's $75 per barrel. Government must be proactive to track and put a mechanism in place to mitigate that impact by looking for other sources in terms of foreign direct investment that was spoken about. So that's $75 per barrel within the context of what is happening. and the reforecast, within the global landscape is something that needs to be watched. That's my view.
I want us to move on because of a time constraint. A lot of issues persist. Severe revenue leakages. How do we deal with that? Whatever it is, how much of this 55 trillion naira budget will go to leakages, through bureaucracy, whatever it is?
You see, like I've said, I'm not really worried too much about all those things.
I'm beginning to wonder what worries you.
No, what worries me is policy. You see,
yes, policies to
once you have the right policy,
leakages.
Leakages, you have a new system now in place. Yeah. There's a new payment system that the government has adopted.
Yes,
which has moved from a private sector one to something that they've developed. For me, those are like positive developments in those areas. What is important is revenue assurance. What do you need to do to be able to sustain look at the bigger picture? If you take a look at the bigger picture, which I've said, selling down your JV assets, increasing your oil production.
But when we sell those things down, we don't want the money to go away.
It's not going away, and that's why you have the budget monitoring. There's monitoring of the budget. That's why you have a legislative assembly, and those are the things that you need to look at. Like I've said, the government's budget is only 15% of our GDP. So there is still a significant amount of our GDP outside of government that the government needs to put the right policies in place to ensure it works. And let's take a look at those policies. I've told you about the policies of ensuring that these refineries no longer import sugar from abroad, that the Nigerian farmers grow them. So if all these Nigerian farmers are will create employment, will increase productivity, will close the output gap. What also worries me, as I've told you, is the debt profile of government. And that is why I'm saying that those assets need to be sold down to be able to increase that. The biggest problem we have also, don't forget that the LNG was suffering from talking about what gas. Other 2 LNG projects back on stream. We need to make the investment in the oil and gas sector. LNG is like 60% completion of its train 7, and it's complaining seriously that it doesn't have gas. So we need to invest in these oil fields to produce gas for LNG to start with, to get LNG optimal, and then for them, LNG is an $8 billion project. So they're looking to commit to train 8. So these are the sort of investments we need to make, and the potential within the gas. Let's even leave the oil alone. Let's look at gas. Government needs to take a look at the gas strategy, sell down assets to be able to encourage the private sector operators to be able to get investments in gas. Because the goose, the dividends that LNG gives to the government every year is significant.
That goes a long way.
It goes a long way. So now, if you do not nurture that goose that's laying that golden egg, that's on the plate.
Okay, good. Let me ask Wally to do this on capital expenditure and how to get the project implementation on track. What are your thoughts around the sectors that should get the most capital investment to drive long-term economic growth? Okay. I'll give you that in 1 minute.
Yeah, CAPEX is extremely important. So when you take an economy and you are dimensioning it into the various components, so you have your consumption, you have your investment, you have your government expenditure, and then you have the difference between your exports and imports. So that investment is extremely key. Now, the question is, from a government standpoint, what has been done in terms of what Tola did in breaking it down, and which the Honourable Minister of Budget and National Planning spoke about? I think, first, they're in the right direction, focusing on guaranteeing security that will make private sector investment to actually come in is extremely important. We've seen also significant allocation to infrastructure. When you do a deep dive into the budget and try to understand what are you going to spend the money around infrastructure on, a review shows that for power, they're looking at transmission. Now, we must hold government accountable, because one of the problems we have is not even generation capacity, but once you exceed certain percentage in terms of output, the ability to actually will that to demand center becomes extremely challenging. So if you have in budget, strategy to actually fix that, we must hold government accountable to ensure that that is actually done, and unbundling that and giving opportunity to private sector to come into that space is actually important. The second thing I would say is around, agri. Now, if you look at the budgets, one of the things they've noted there is agro-processing zones that they plan to establish in collaboration with AFDB and some other multilateral. We've been saying that for some time now. It's extremely important that this government takes that forward. Yeah, you can't take it without boldness from the government, so it's extremely important that we accelerate that conversation in a strategic manner.
So
I think the
third one.
The third one I would say that is extremely important is human capital.
We're going to talk about that, and that's what my next question. Just check. You checked your blood pressure this morning?
Easy. Yes.
Easy.
Watch.
You guys are good.
Apple Watch.
All right. We'll talk about health and social. You guys don't need social welfare. So we'll talk about social welfare and health when we come back. It's your KPMG Arise 2025 budget today. We're live from Arise.